Well, good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Brand new day, but after yesterday's reprieve, looks like we are poised to see more red on the screen. Given the fact that the GIFT Nifty, although it has pared some of the early losses, it's still down 170 points. And if you look at the market in the pre-open, we are seeing cuts of 1% or so. The Nifty down 200 points in pre-open. Global markets not looking all that great. We saw a sharp reversal when it comes to Wall Street, came off significantly from the day's high, in fact, to end in the red. Asian markets clocking steep losses. The Nikkei was down 3% at one point in time. Right now, I think a little bit of pullback. But still, Hang Seng, China, all these markets are trading with deep cuts because, of course, Trump has slapped a 104% tariff on China that comes into effect from tonight. That will keep the markets on tenterhooks. Although yesterday Trump had said that Japan and Korea are in talks to thrash out a deal. Because of that optimism, we saw some bit of green yesterday, recovery. But today, of course, that has fizzled out. Domestically as well, we have the RBI policy today. 25 basis point rate cut looks like the base case scenario, but maybe an outside chance that the governor could dole out a 50 basis point rate cut. Who knows? We'll discover only at 10 a.m. But yes, lots to watch out for in terms of stocks as well as companies come out with their fourth quarter updates. We'll take stock of some of them, and we'll also take stock of all your stock related queries. So keep them coming in. We'll try and get them addressed by our experts on the show. Before we move any further, quickly take a look at the top headlines at this hour. US futures trade lower after another weak session, with three indices ending lower by up to 2.5% as investors braced for rollout of Trump's tariffs. The Dow, meanwhile, has lost 4,500 points in a matter of 4 sessions. Treasury yields ended at 1-week high as White House confirmed a cumulative 104% tariff on China. Asian markets as well open lower as country-specific tariffs are set to come into effect. Nikkei trades with cuts of somewhere around 2.5% or thereabouts. The GIFT Nifty, has pulled back a bit, but still down at 170, 180 points or thereabouts. And in the pre-open, we are also clocking in losses of somewhere around 1% or so. Brent crude slides to $60 per barrel as sell-off continues on fears of a full-blown trade war. Meanwhile, gold prices rise back above the $3,000 mark amid a weak dollar and escalating trade tensions. Even as Donald Trump's sweeping global tariffs, including 104% against China, are set to take effect, the president says a lot of countries are wanting to make a deal and China will also make one soon. Once again, he says major tariffs on Pharma will be announced soon. RBI Monetary Policy Committee is expected to cut the repo rate by 25 basis points today. Street expects the central bank to strike a dovish tone as tariffs could be treated as additional headwind for financial markets. Well, quickly take a look at the cues for trade then. Of course, yesterday we saw all-round gains tracking positive global cues, although we did come off the day's high, but 49 out of 50 Nifty stocks ended the day in the green. The market breadth was also firmly in favor of advances, and BSE listed companies managed to regain over 60% of the market cap loss that was seen on Monday. Nifty itself, ended above that 22,500 mark, and the Sensex was also back above that 74,000 level. The Nifty Bank Index, gained 650 points yesterday, to come back above that 50,500 mark. Today, of course, rate sensitives, particularly banks, will be in focus, as we have the RBI monetary policy. Pharma and IT, both these pockets saw buying interest after recent sell-off, but watch out for Pharma, given the fact that Trump has reiterated the fact that they will be announcing never seen before tariffs on Pharma. All the sectoral indices yesterday ended with gains. The volatility index as well slid more than 10% or so. In terms of options cues, put call ratio rose to 0.84 vis-a-vis 0.72 in the previous session. And if you look at the F&O ban list, no new additions or deletions. Birla Soft, Hindustan Copper and Manappuram Finance, these three counters continue to be in the F&O ban list. Today, of course, is the weekly expiry as well when it comes to Nifty. Remember, tomorrow is a holiday. Market holiday, so the weekly expiry happens today. In terms of fund flows, foreign investors net sold stocks worth 5,000 crore rupees almost in the cash market. DII buying continues. Remember, day before yesterday, we had a 12,000 crore rupee DII buying figure. Yesterday, they bought shares worth 3,000 crore rupees in the cash market. So, all in all, the cues coming in from yesterday were positive, but if you look at this morning, not looking all that great, and looks like 22,500, 22,400. These are some of the levels that could get violated once again. But let's bring on board our guest for today then. Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, PL Capital, joining in this morning. Vaishali, great to have you on the show. Good thing that we saw a one-day relief rally, but looks like that is going to be taken out today. That rebound is expected to fizzle out. On the downside, Monday we saw a deep sell-off. We took out 22,000 as well. But today, if one were to say on the downside, what is the key level that you'll be watching out for?
Very good morning, Nandita, and thanks for having me on the show. So yes, the overall market is in a deep red zone territory. It was just a relief rally that we witnessed these 2 days. Now today, once again, we are getting the indication that yes, it's going to be a weak start. So for today itself, I would say 22,400, 22,300 would be the level that we would be witnessing as support. But however, the downside is still quite likely on the card. So I think it's a sell on rise market even now.
Sell on rise, but for the Nifty Bank Index, so this is one pocket that has managed to weather the storm pretty well. Yesterday, it reclaimed crucial levels of 50,500. Today, of course, you have the RBI monetary policy as well. Any particular counters that you would be particularly watching out for, both from private and PSU names? Because yesterday, we saw a good up move, and we saw brokerages coming out with reports, wherein they have upgraded some of the counters like SBI. So, on your radar, which of the banking stocks would be there?
So, for now, of course, the Bank Nifty is outperforming and the banking stocks are still doing well. So, I would say, of course, SBI is holding on with its uptrend. So is the case with Axis, Kotak Bank. So, these are the stocks, even ICICI, HDFC Bank. All these banks are so far holding on, but it's a wait and watch scenario. I mean, I think right now RBI policy is just going to add on to the volatility, but I would not recommend a fresh buy. In the mid cap size, of course, the PSU banks look pretty attractive, like Union Bank, Bank of India, Bank of Baroda is already showing strength. So we'll wait and watch. We'll go for as per intraday strategies. Right now, I'm not so gung-ho about any stock.
Okay, wait and watch. That's the call. But a couple of stocks that did well, yesterday were the likes of BSC, MCX. MCX I think has been witnessing good traction in the last couple of sessions. Any of these exchange stocks, catching your fancy now? BSC, MCX. What would you do with these stocks?
So I think for a fresh buy, we can have a look at MCX because this is one stock which looks good at 5,000 levels. And if we see that we have a good momentum setting in, 5,000 to 5,500 level is quite possible.
Okay, that's the view on some of these exchange stocks. But just about 5 minutes to go for markets to open. I would want to ask you, what are your recommendations for the next couple of sessions? Anything that you would like to share for our viewers?
So I would say, it's best to be in the safe defensive stocks. Like right now, it is the FMCG counter and crude related. So we have recommended Asian Paints, Hindustan Unilever, Marico. These are the stocks which look quite fine. So if market is going to be sideways or something, then I guess these are the stocks which should do well.
Okay, another stock that was among the gainers yesterday was Shriram Finance, top Nifty gainer. We have a couple of queries as well on this particular counter. Naveen has written in, wants to know your thoughts. Should you ride this momentum when it comes to some of these financial names, Shriram Finance in particular?
Yes, so the key thing is to follow the levels right now. Just like the other NBFC, the main ones, Bajaj Finance, Bajaj Finserv doing well. So also is the case with Shriram Finance. It is getting into a trend. So if one has to make a trade, 620 would be the support level, below which again it could be getting into the sell mode. So near term basis, 620 is the support, and the near term resistance comes at around 665, 670. If we see the stock moving above that, then there is further clarity that all likelihood this can go towards 700.
Okay, that's the view. And I think we also had another query from Rupak Mehta, and he also wanted your thoughts on NBFCs, but we've covered that. Rupak, hope that answers your query as well. But Vijaya Diagnostic was an outperformer yesterday, 18% gain on that stock. It was a stellar rally, so to say. We have a query from Shweta Naidu, wants to know what to do, whether she should exit at rise or hold on. I think she bought at 1,119 rupees. On a Vijaya Diagnostics, what would you advise her to do?
So, well, 2 days we have seen a good bullish candle setting in. So, if this stock moves above 1050, hold on, you'll get your price of 1150.
Okay, that's the call. Hold on. Since we are taking up queries, want to take up one that has just come in from Satya CK. He wants to know your thoughts on Meghmani Organics and Aarti Industries for the long term. Would you look at some of these chemical names now, Vaishali? What are the charts telling you?
So make money is showing signs of revival. I would strictly follow because it has shown good corrective move. 55 should be the stop loss. If we see the stock moving above 70, that means there is further strength setting in, and that could take us to 78 to 80 levels. That's how I would trade on this stock. As far as Aarti is concerned, well, we still have a downward trajectory coming in. It's not showing any signs of support also for now. So I would say 340 is the near term support and 400 is the resistance. Let's see which way it goes. That way we can make a view.
All right, that's the view. Hope that answers your query. But just about 2 minutes to go for the markets to open. Just want to take up, one of the queries that has come in on APL Apollo. No, before that, let's take up a query on Raymond. This one's coming in from Yagnesh Balakrishnan. Wants to know your thoughts on this particular stock for the long term. He's holding 50 shares at 1,632 rupees. Stock is trading at 1455. He's making a bit of a loss, but the stock has seen good traction. If you see the last 1 month, it has clocked in gains of 14% or thereabouts. He's making a loss here. Would you advise him to hold on and wait for him to break even or even more gains?
Continue holding because I think this is consolidating 1400. I am seeing a range of 1400 to 1550. So if once it crosses 1550, you will get the target of 1700 and so on. So I would say right now hold. Below 1400, my view gets negated.
Okay, that's the call. Hold on. I hope that answers your query. But we just have somewhere around 30 odd, 26 or 25 odd seconds to go for the markets to open. Let's take stock of what the markets are doing or what they have done in the pre-open session. The Nifty settled 75 points lower, so 22,460. So although Asian markets are selling off, we are pretty much better poised, as has been the case over the last week or so. In fact, ever since the tariff announcement was made, we've seen markets like Hang Seng, Nikkei sell off quite steeply, but we have done fairly well in comparison to those markets. First ticks coming in, it's a 100-point cut on the index, so we've taken out 22,400. Almost a 0.7% kind of a loss or kind of a downtick on the index. For Sensex, we are at 73,775 or thereabouts, 440-point cut. The mid-cap index, kind of outperforming if you compare it with the benchmarks, 0.4% lower on the mid-cap index, down 200 points or thereabouts. The Bank Nifty as well, the cut is somewhere around 140 points or thereabouts, so no big cuts, ahead of the policy. 50,000 400. We are round about that level. Advance decline ratio at the current juncture skewed in favor of losers. 2:3, that's the advance decline ratio on NSE. But let's take a look at which are the sectors that are holding out and which are the sectors that are taking a sharp knock. I want to particularly see pharma, given the fact that we have once again had comments from Trump on tariffs. So yes, the pharma pack is down 2%, over 2%, so to say. IT is also down 2.5%. Remember, earnings kick off tomorrow, IT earnings with TCS reporting numbers. So ahead of that, IT down 2.5%. You also have Realty pack down 1%. Banks, of course, down somewhere around 0.5% or so, no, 0.2% for that matter. Autos also, but it's the IT and pharma pockets that are taking the hardest hit. FMCG, managing to hold out in the green. Gains are slim, but still it is trading in the green at the current juncture. But let's take a look at some of the movers and shakers on the index then. If you look at the top laggards, it's the IT and pharma names dominating the list. No points for guessing because these two sectors are the hardest hit today. Wipro, top laggard, 3.5% down. Dr. Reddy's down 3%. Infosys, 2.5%. Metal names, extending or resuming sell-off. Tata Steel, 2.5% down. Tech Mahindra, HCL Tech, Cipla, Pharma, Sun Pharma, TCS, all these counters are trading in the red. And so is Hindalco and Jio Financial as well. Was among the top Nifty gainers yesterday. Today it is down almost 1.5% or so. What's holding out is Power Grid. I think that was the sole laggard yesterday. Today some bit of buying coming in. Nestle, Bajaj Auto, HUL, even Tata Motors up somewhere around 0.4%. Auto names like M&M, Hero Moto, these are also holding out. Maruti as well. Kotak Mahindra from the banking lot providing some bit of support, and Axis Bank also trading in the green. Take us through some of these, auto names, Bajaj Auto, M&M, particularly Tata Motors, so to say. Tata Motors, of course, has seen quite a bit of beating, but last couple of sessions, the stock has managed to hold out in the green. Any thoughts on what should be done with the Tata Motors at the current juncture after the kind of sell-off that we've seen on the stock? Would you say it's in the oversold zone and the worst of the sell-off may be behind us?
Technical, we have seen good corrective move coming in, and 560 was the prominent support. So far that is respected. So I think if market is to capture in all the negatives that we have been going through, 560 should hold on as a very good support level, and one can witness a bounce from there.
Okay, we also had a query on Tata Motors. I just spotted it from Pannu Anil. Hope that answers your query. But I want to talk about, shares of IGL that took a sharp knock yesterday because of the government's draft EV policy. They would be looking to discontinue CNG autos in the capital. Shares of IGL took a sharp knock yesterday. Just want to see what they are doing today. Down another 1.5%. 177, that's where it's at. Quite a bit of a sell-off from its 52-week high. In the last 1 month as well, the stock is down somewhere around 3%. On a YTD basis, it's down 13%. What would you do with the likes of an IGL? Even MGL would be in focus, given the fact that it has hiked. There's a price hike that has come in by 1.5 rupees. So IGL and MGL, what would you do with these two stocks from the gas space?
Say avoid, because IGL also is showing weakness. There is nothing happening in the stock. I would say avoid for now.
Okay, avoid for now. I think we had a query on this particular counter from Debu K. Hope this answers your query. But let's talk about some of the other movers then. What would you do with some of these realty names? Godrej Properties came out with its update, fourth quarter update recently. Stock was doing well, update has been pretty good, and so is the case with Phoenix Mills. The update came in and it reported a strong one. Retail consumption increasing by 15%, 21% for the year. The company also achieved significant milestones in its commercial, office and hospitality segments with improved occupancy rates and revenue per available room at its properties as well. any of these names catching your fancy? Because I think last week, couple of days we saw good traction. Uh, would you say the stocks have seen the worst of the sell-off, because Realty Pack itself has been beaten down quite a lot?
So I've been tracking Godrej properties very closely, and I think 1900, we have seen good erosion coming in almost all the realty stocks, and Godrej properties, 1900 is the level to watch, below which I don't think this stock should go, and this makes it a good level to start accumulating. And even if it corrects, I think downside would be quite limited.
Okay, that's the view then. Another stock that's in focus is Vodafone Idea. It has allotted 3,695 crore shares to government, for 36,950 crores, and the government shareholding now stands at almost 49%. It is known to be a very volatile stock, way below its FPO price. In the last 5 days itself, it has shaved off 13 to 13.5%. Is it a good trading bet, Vodafone Idea, for you?
I would never suggest. I mean, I'd rather get into stocks like Bharti Airtel and so on. But, well, Vodafone, if one has to, just keep a range of 7 to 8.5. 7 is the bottom being made, and above 8.5, it would bring in some conviction or some confirmation that yes, it can go higher towards 9.5, 10. I would not personally recommend this.
Okay. Won't be recommending a Vodafone Idea, but another stock that's in focus and is doing well, in a weak market is Home First. It's up 3.5%. It has launched its QIP. Indicative price is at 968 to 987, 988 band. It's a 0 to 2% kind of discount to yesterday's close price. The company is seeking a dilution of 14.3% of its pre-issue capital, and the base size is at 1,000 crores, and it can increase to 1250 crore rupees. Good traction today. Even on the, if you look at the last 5 sessions, it has given positive returns. The 1 month returns are also positive. YTD basis, mild losses, has done better compared to other mid-cap names. It's holding above that 1,000 mark. Would you suggest Home First?
Well, so Home First also doesn't have a clear trend. It's just consolidating. So one freak trade that we've had of stock making low below 900, but otherwise you see overall it is having a range of 980 to 1100 levels. So that's how I would look at this stock for now.
Okay, that's about Home First. But would like to take up that query on an APL Apollo. This one's coming in from Alex. Wants to know your thoughts on what one should do in the current market scenario with an APL Apollo. Stock is down 1%. Last 5 sessions hasn't had great luck, down 7%. Although on a monthly basis, it has managed to give some positive returns. 1445, 1450 is where it's at. But would you expect the stock to break out? Because I mean, it has been consolidating. If you look at the charts.
If you ask me, it is below a cluster of moving averages. So I think in a weak market, if market is to show further on some corrective mode, this can go towards 1380. So unless and until this stock moves above 1500, this would show some strength. For now, it's on a corrective bias.
Okay. That's the view then. I hope that answers your query on APL Apollo. Another query then coming in from Deepankar, wants to know your thoughts on a CG Power. It has of course dropped from 650 levels. Wants to know what is the next level to watch out for. It's around that 550 mark, trading flat today, and monthly returns haven't been all that great. 9% down. 26% down on a YTD basis. Any level that you'll be watching out for here? Do you think there needs to be more correction from current levels?
It can happen. Look at the market on the whole. It's right now also showing good selling pressure. The advanced decline ratio is also negative, and when we are looking at this stock also, it is. So only consolation is, even when I'm looking at the weekly chart, it has probably retested the previous low of 500 level. So if this stock moves below 500, we are once again seeing some selling pressure emerging. Till then, just wait and watch.
What would you do with IT ahead of numbers, Vaishali? Yesterday we saw good traction, but again today, stocks have resumed their sell-off. The likes of TCS in particular, because numbers are coming out tomorrow. Wipro, Infosys, all of them are selling off. So, any thoughts on how one should navigate?
So I would say actually, as far as the result is concerned, I think the pricing is factored in. But right now, what is the worry is the US, the tariff impact and all. So that is why we are seeing tremendous beating coming in IT and pharma. So let's wait for some stability and then would get into the stocks.
Okay, but another big story today is crude. It has crashed to 4-year lows, $60 on Brent. Any stocks that you would be really looking at for playing this crude theme? Would you look at paints for that matter?
Yes, so paints, I mean, that's why when we just started our conversation, I was saying Asian Paints, Berger Paints, and Pidilite. These are the stocks that one should be focusing on.
What about Chennai Petro? We have a query from Kanchan Biswas. Haven't really seen the charts, but any levels that you'll be watching out for on a Chennai Petro? I don't have details as to whether she holds any position or not. Stock has been doing fairly okay in the last 5 sessions.
Yes, it's gradually showing signs of improvement. So I would say 580 to 700 should be the range that I would look at.
Okay, that's about Chennai Petro. But let's talk about some more stocks then. Z is one stock that was in focus yesterday. It pulled up the entire media pack with itself. Z otherwise is known as a trader's delight. Your thoughts on how one should really be trading into that counter?
So, well, Z, I would say absolutely as per levels because this has always been a disappointment. 95 would be the range and above 110, 112, you can look at a target of 115 to 118.
I want to talk about a Keynes tech. It saw very good traction yesterday. All these Dixons and Keynes did see a fair bit of correction, but renewed buying is also being seen here. Which chart is looking better when we talk about some of these EMS names?
I think Keynes is fairly priced. I think it should be a buy at every decline because we have seen a long consolidation. So this makes it a very good buy at these levels. And I would say, yes, wait for it to go towards at least 5,400 or so.
Okay, BEL is another counter from the defense pack that was buzzing, yesterday on the back of an order win from the Indian Air Force. Within these names like BEL or any other defense counter for that matter, is it a good buy now? In the last 1 month, we've seen BEL giving muted returns, 2.5%, but the selling that some of these defense names had seen seems to have been abated. So 300, is that a fair level to watch out for on BEL now in this leg of say potential up move?
I would not be in a hurry because once the target has already been met, our target resistance was around 310, and I think the recent history shows that we have made a high of 306. So I would say just it may get into a consolidation zone right now.
And what about cables and wires? Stocks like Polycab, Kia Industries, they saw quite a bit of a badgering recently, of course, with competition concerns at play. But at these levels, does Polycab merit a buy?
The Polycab also totally oversold, but good consolidation taking place. So for the recent data, what I would say is 4,600 should act as a support, but the strength and reversal would be confirmed only above 5,300. So these are the levels that one can look at.
Okay, stocks like RK Forgings are looking, extremely good today. Look at RK Forgings; it's up 5.5%. Some of these auto part makers and truck makers had seen quite a bit of a, badgering after the auto tariffs were announced, 25%. But the kind of move that we are seeing now, would you say it's just a one-day wonder, or is there a way to play this up move?
Well, so this is a chance to take, but I think technically very well placed, and we have been seeing that this stock is showing improvements in 3 days. So I would say, of course, every call right now needs to see a stop loss. So 700 is the support, and if the going is good in the stock, it can go towards 900.
Okay, that's the view then on. In fact, let's shift focus to Vedanta then, because we have seen an upgrade coming in from Investec on this particular stock. The stock has seen a fair bit of correction. Now, Investec says that after the kind of correction it has seen, given the fact that dividend yields are looking attractive, one could look at buying Vedanta. Your thoughts? The stock has shaved off 15% in the last 1 month itself. Would you say that the counter is in oversold zone and is primed for a recovery here on?
I would definitely at least give it a thought to start accumulating because exact bottom fishing is really tough. But I would say, yeah, 360, 340 is the support range. So I would start accumulating at least.
Okay, start accumulating Vedanta, that's the call. With that, we've come to the end of the query segment and the technical check as well. Vaishali would like to thank you for taking out time and joining in this morning. Look forward to more conversations in the future and have a great trading day.
Thank you. Same to you.
Thank you. Well, on that note, before we get on board our next guest, let's see what the markets are doing. 0.6% kind of a downtick around that 22,400 mark, 140 point cut for the Nifty for the Sensex as well. It's down somewhere around 350 points. 73,882 is where we are at. So the losses aren't all that deep compared to what's happening across Asia. Even Asian markets have kind of recouped some of the losses. Bank Nifty down 150 points. 50,350 is where it's at, ahead of the RBI policy. Governor speech at 10 a.m. Let's see whether it's a 25 basis point rate cut and there's a change in stance or not. So lots to watch out for. The mid cap index, however, has accelerated the sell off. It's a 1%, over 1% cut on the Nifty mid cap index as we speak, and the advanced decline ratio not looking all that great. 1:5. That's the advanced decline ratio. 378 stocks advancing to almost 1900 stocks declining. So yes, the broader markets have seen accelerated down move. But on that note, let me bring on board our next guest for today. Joining me is Siddhartha Khemka of Motilal Oswal. Siddhartha, lovely to have you on the show. It's been extremely volatile, no points or no, not really any reason to point it out. Yesterday was a day of reprieve. But, what would you really do for the short term? How are you approaching the market now, given the volatility and all the commentary that is coming in from Trump on tariffs?
Yeah, good morning, Nandita. Good to be on the show. So if you look at the volatility in the market is primarily induced due to the global trade war escalation and the fears of an impending recession, not only in the US, but across the world, which could impact the economic growth. And that is leading to this sharp fall in equities all around. So purely, if you want to look at from a short-term perspective, while if the market falls, most of the defensives also do fall. But there are two small sub-segments where we could hide, or you can say find some solace in this global volatility. First is the domestic consumption theme, where they are not to that extent impacted because of the tariffs, because of the global trade wars or the recession. And the second is the crude beneficiaries. So because of all these concerns on the economic slowdown, crude price have fallen to almost 3.5 year lows. So that definitely helps improve margins for a lot of sectors like aviation, paints, some of the staples where they are more focused on the soap segment, the oil marketing companies. So there are clearly these two sectors or sub-segments where one can look at solace. So if you look at the domestic consumption theme, again, some of them are also beneficiaries of the low crude price. So for example, in aviation sector, Indigo, we believe that benefits a lot from the crude oil price fall. with margins improvement. Q4 we saw a strong quarter. Q1 would continue to see strong demand because of the connectivity improvement in India. A lot of tier 2 towns are now having a much larger and developed airports where you have much larger connectivity. Then you have some of the food and beverages companies, again, purely domestic focus, something like a Varun Beverages or a Jubilant Foodworks. That's the theme we are playing purely from a short-term perspective.
Okay, domestic focused consumption names and even OMCs, crude related stocks would of course be on the radar when it comes to themes to watch out for. But what about banks? This is one pocket that has managed to weather the tariff storm pretty well. Although we have the RBI policy announcement in less than half an hour from now. Chances are that the rate cuts may be much more than what was being anticipated in the face of tariff turmoil. What happens to bank margins? Would you still take a bet on banking names? And if yes, private versus PSU, what's your preference?
Sure, Nandita. I think that's the third segment from the domestic theme. So if you look at domestic economy related stocks, the financials is the another space where they're not much impacted by the global volatility. So banks, financials, NBFCs, I think what RBI has done with kind of the liquidity injection that they have done over the last 2-3 months, plus the CRR cut, the interest rate cut cycle, I think that's a kind of positive for the entire financial space. So within the banks, I think the private sector banks would be a slow and steady kind of a number that we'll kind of see in Q4. And hence you see that they have not participated to that extent in the last 1.5 to 2 years, and hence the valuations are comfortable, and with a steady and stable earnings growth, there is definitely a lot of possibility that the large institutional funds would come into them and take some refuge in this environment. So between what we like the large corporate lenders, be it your ICICI Bank, HDFC, Kotak, SBI. These are our preferred picks. Between private sector and PSUs, I think PSUs would be one which will report a little better numbers. But in this volatility, I think better to stick to some of the large caps. What we like is that NBFCs would be much better placed where the NIM expansion will happen with a RBI rate cut. They are much likely to benefit from a rate cut compared to banks where they are mostly passing on any rate cuts that happen. So NIMs will stabilize for banks while NIMs will expand for NBFCs. And within NBFCs also, I think the consumer lending businesses, that is something that one can look at, to something like a Bajaj Finance or a Shriram Finance. So these kind of stocks or a Cholamandalam Investment and Finance. I think these companies are better suited in the current environment.
Sure, point taken. NBFCs, consumer lenders are better placed in this environment. But let's talk about IT, given the fact that TCS reports numbers tomorrow. Of course, TCS doesn't really give guidance, but do you think that in the current environment, companies like Infosys that give guidance may refrain from doing so? And particularly from the fourth quarter, what are your expectations?
So yes, I think the Q4 numbers will be a little weak, especially if you look at the tier 1 players. I think what we are expecting is a flattish to a marginal decline in the constant currency revenues for the tier 1 players. Tier 2 players, I think, are better suited. So again, right from a flattish to a 2.5-3% kind of a growth for the tier 2 IT companies. Having said that, I think IT currently the visibility is very low. I think there is lack of clarity, and there could be a possibility that Infosys could come and say that for now they are not giving a guidance. They will wait for clarity to emerge, because in this environment it is very difficult to call out how the discretionary spending, especially in the US corporates, will pan out if the tariffs are not negotiated, are not dealt out. I think the US economic slowdown will happen in the next 2-3 months. You see some of the global economists, the probability of a recession or an economic slowdown has gone up in the last few days with Trump taking a strong stand on the tariffs. I think it's a very hazy outlook right now. Definitely, spending has not improved, and I think while the stock prices have corrected, the sector may continue to languish, and hence I would suggest to wait it out and stay away from IT for the near term.
Would you say the same about pharma, given the fact that we've had repeated threats from Trump that they will be announcing never seen before tariffs on pharma? Generics, may not be able to, I mean, I don't know whether they'll be able to absorb the tariffs or not. But would you say that CDMO players may benefit from the shift away from China? 104% tariff on China, that's what US has done. Your thoughts on the entire pharma basket? Do you think CDMO still, is one pocket that one should really look at?
So, Nandita, I think definitely in this environment, the US generics are the first line of impact if we get to see the kind of tariffs that we have never seen. If that's the case, then that's a big blow. For the CDMO players, I think they are definitely better suited. But the challenge is that a lot of these CDMO players or the Indian pharma companies, they are dependent on the APIs or the ingredients from the China. So I think in that sense, if China is unable to directly provide a lot of these goods to US, I think Indian companies do tend to benefit not only from the CDMO players, but a lot of these API manufacturers also would stand to gain from this entire US-China or this US tariff war.
Lastly, just about less than 20 minutes to go for the governor's speech. While the case is, the base case is a 25 basis point rate cut. The number of cuts, earlier, a lot of experts were saying that it will be 50 basis points or 75 basis points for the entire fiscal. But given the pressure on growth and the fact that India, of course, will not be insulated, so to say, there will be impact on economy. Do you expect 100 basis point kind of or 1 percentage point kind of rate cut for FY26 or even more for that matter?
So, Nandita, I think it's difficult to call out right now. Even we are of the camp that there are 2 to 3 more 25 basis points rate cuts that is there. So, for the entire year, we had a range of 75 to 100 basis points rate cut. But things are changing, and we'll definitely hear out the new governor, his thoughts, and given the global volatility, I think even the US Fed is taking a wait and watch kind of a situation. So let's see. But definitely with the growth challenges coming in and the economic slowdown concerns, there would be more pressure on RBI to cut rates going forward.
All right, that's the view then. Just about less than 20 minutes to go for the governor's speech. Commentary becomes very important as growth takes center stage, given the fact that inflation is well within the comfort zone now. But with that, Siddhartha, would like to thank you for taking out time and joining in. A pleasure chatting with you, and I look forward to more interactions in the future as well.
Thank you. Thank you so much.
Thank you. Well, on that note, just take a look at the market before we call it a day on opening bell. 80-point downtick. Now we are off the lows, 22,450 back on the charts. So we are cutting some of those opening losses. The bank index is down just about 60 odd points. Even that has recovered in the countdown to the RBI policy, 50,450. We are around that level. So yes, there has been some bit of a pullback. Even the mid cap index, it's now down 0.9%. The breadth is kind of improving. So let's see. I mean, markets are on tenterhooks ahead of the RBI policy. Focus will be on the governor's speech, what he says about the tariff turmoil, whether there's a change in stance or not. A lot of things to watch out for. So stay tuned to Money Control for that. We'll be getting you live coverage on the RBI policy 10 a.m. onwards. You can't afford to really miss it. So yes, come back and join us then. But with that, it's a wrap on this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Money Control. We'll be back soon with a live stream on RBI policy.